Good afternoon. I'm Isaac Colazo with STR, so I've met several of you. And today we're going to look at all the data regarding luxury hotels, but we're going to start over and then what the outlook is. But the way I'd like to start is going backwards. And what are we seeing? What are the trends? And then we'll go forward and see what we expect for 2025 and beyond. First thing we're going to start off is what's happening with demand. And looking at a global, all chain scales, all classes of hotels, global demand now is above where it was in 2019. And that's significant, right? Because again, if you heard us yesterday at around this time, you still have to benchmark to 2019 because again, that was the finish line. That was the best we'd ever done as an industry. And as you can see here again now, we're doing it again. We are now well above where we were in 2019. But what's important to understand is, and we expected this is not surprising to anyone, is that growth rate is now beginning to fall. You know, we were running 13% or 14% higher year over year in 2023. That's not sustainable. It was time. Now we're getting down to 2.2%. And then you can see certain countries that came out of this earlier, like the US, is actually running about 0.5% year over year demand growth. And the way I've calculated or not calculated, present this data, I put the 10 largest countries essentially, and then everything else. So that's how I kind of, just to give you an idea all around the world, what's happening in the industry. Now, as we start going in and we'll start diving into luxury, you can see we've been using this word a lot, bifurcation, bifurcated. You can see that in the chain scales, again, very much the bifurcation we've been talking about, where the higher end hotels are doing much better in room demand growth versus the lower end. And we've been watching this for almost a year now. Oddly enough, in November, we had the reverse bifurcation, where the lower end did better than the higher end. And you'll see that data coming out in about 15 days when we finally process it all. So as you can see, luxury is leading. And as we start looking back over the last on a 12-month rolling basis, going back to 2019, indexed to 2019, that's why the line starts at 100, you can see that luxury hotels, just that class of hotels, were well below everyone else. And what happened at the end of the pandemic is we really saw economy hotels, mid-scale hotels come back very fast. But full-service hotels, including luxury, did not. And it took some time, but now you fast forward, you get to the end of this time frame, you can see that luxury hotels are growing faster than all other classes of hotels combined. And when you start looking at room demand, you also see what you saw with the global demand. You see that luxury demand is higher today than what it was in 2019. And again, it just little by little, everything seems to be returning to normal. But what I'll caution you is that's just the demand side. When we get to the ADR side, it's going to be a little different depending on how you look at it. You look at it nominally or real. And I think the key is to look at it on a real basis or inflation adjusted. So then when you start looking at, okay, how is global luxury doing? Again, it's still rising by 5.5%. You saw that in the previous slide. But then when you start looking at it by countries and regions, you can see very strong growth. And we talked about that yesterday in Asia. Japan has been just very, very strong this year. Some of that is actually Chinese travelers. One of our colleagues was in Japan, and she was talking to several people and said, yes, the Chinese are starting to return to Japan. They haven't returned to the US in the same numbers, but they are venturing out. And then you can see rest of Asia, Spain. I mean, that's very strong growth. And again, this is year over year growth, so that's pretty significant. As you think about what's happening and think about outbound travel and the growth in luxury, you also got to think about airlines. And this is a US data slide where we look at TSA airport screenings, and TSA screenings are at an all-time high. In fact, if you look at it by month, August was the highest, July was the second highest, July was the highest, June was second highest, and then May was the third highest that they'd ever seen. So again, lots and lots of people traveling. I think this bodes well for the luxury sector. And again, this is a factor we've been watching. And another factor we've been watching is that international outbound and inbound. What you see here is we've indexed international inbound travelers as well as international outbound travelers. Inbound to the US, outbound from the US. And you can see that outbound continues to see very strong growth. And again, what's surprising about this slide is we anticipated actually last year that the growth in outbound travel would slow. But it's still in double digits. If you look at it year over year, this is an index, but if you look at just year over year, it's still growing at double digit amounts. So Americans continue to go out, and again, luxury travel, I think it's a benefactor of all these Americans going out. Conversely, US hotels haven't done very well this year. They're doing well, but we've seen a slowdown in demand. but some of that is because we're still missing that inbound. You can see that is negative, and it's still around 10% down versus 2019. I should have said the index is against 2019. Switching to the supply side, supply is still very sluggish around the world, but it's better for luxury hotels than other classes. It's still globally rising by 3.3%. And again, you can see the growth rates around the world, with Middle East, Africa seeing very strong growth, but still Japan leading even on the supply side. And then you can see Canada actually went negative. That has to be a hotel under renovation. I meant to look at that. I had some found what's going on in Canada, but that's probably a hotel under renovation, which will come back, because I doubt that a luxury hotel would just close permanently. And in the US, even the US is seeing about 3% growth. But I caution you, in the US, some of that is occurring because of changes in the landscape, not necessarily new builds. So with the partnership that Marriott has with MGM, some of those hotels are now flipping where they were independent as MGM, now they're becoming branded. And since they're not brand new, but they're just moving into that luxury segment. So some of that is that kind of movement, and that really threw us, because at first we was like, what is going on? And then we realized I had missed that memo that Bellagio was gonna be the luxury collection, and I just missed it. And so that's some of that as well. There are some new hotels opening. We did see a Conrad open. There's also been the Lowe's in Dallas-Fort Worth and the Arlington. So there are some hotels opening that are new build, but again, we're seeing some noise in that data at this point. In terms of occupancy, occupancy is growing now. You put the demand side and supply side. Globally, occupancy has grown 1.4 percentage points. Even though it says the percent sign, it's percentage points. And again, now here you see a little difference in terms of Japan's occupancy is not growing as much as we've seen the demand and supply number. Right now it's on the bottom of the list, closer to the US, while the rest of Europe is seeing the largest demand or occupancy gains. Rest of Europe, some of that is Eastern Europe, where we've had some issues, as you know, some global crisis. So that occupancy started to come back a little bit. The rest of Asia is everything from China. And Latin America, I thought, was really interesting to see that growth as well, and in terms of occupancy. In terms of looking at it against 2019, I can't speak, 2019, you can see even though we've had the highest demand ever in this segment, it's still occupancy-wise below where we were in 2019. So not only will I show you that real ADR is low, but also the occupancy still has a way to go. And on the right-hand slide, I show you, again, the various cuts by countries and regions, and you can see the gaps. The gray line being that 2019 benchmark, the green line being the occupancy as of October year to date. And so there are significant gaps. Australia, even the US has a significant gap. Japan still has a significant gap. Again, you saw the supply was growing in Japan, so that kind of makes sense as well. But again, we haven't gotten there. And I said, yesterday we were talking, we were discussing we should stop comparing to 2019. I would say no. That's the finish line. We've got to get back to where we were. And it's boring, it's tiring, no one wants to hear about it anymore. It's almost 5 years ago. But again, as you can see here, we're not there yet. And then looking at, the way I look at it, the cool thing about being at STR is I'm like a kid in a candy store. We have all this data, right? We have 63,000 hotels in our database on a monthly basis. And I can then now do analysis on a hotel level. And so what I did here is like, how many hotels have actually reached their 2019 occupancy? And what you see on the right-hand side, globally, only 38% of hotels are back to where they were at an occupancy standpoint. And then if you know by country, in the Caribbean, they have the most hotels that are back to their 2019 levels, which is about 60%. But then you can come down to the US, only 20% of hotels, luxury hotels, I should have said that, everything here is on luxury, have reached their 2019 levels. So where's the gaps? Where we still need a lot of improvement? Well, the biggest gap continues to be in the weekdays. So that's not news to anyone. And here what we did is we defined weekdays as Monday, Tuesday, Wednesday, and then with shoulder days, Sunday and Thursday. Previously, we used to say Sunday through Thursday were weekdays, and then Friday, Saturday were weekends. But with the pandemic, we started seeing so much differences on Sunday travel that we decided just to break that out. What's also interesting on this slide is the decline in occupancy. Well, actually, this is the wrong slide. Sorry, I'm thinking the broader one. In the global picture, and you looked at the U.S., you would be thinking weekends have been actually declining, while luxury globally is actually increasing. So again, there's some differences. A lot of this data is almost, you have to look at it by country, you have to look at it by market, because it just changes so much. But here again, the big idea behind this slide is the improvement still needs to be weekdays, and a lot of that is the business travel that hasn't returned. In terms of ADR, we also think it's normalizing. It's getting back to where it was. This is pretty interesting, the way, PowerPoint, I should have adjusted this, but there's not much difference between 3.4 and 3.3%, despite how PowerPoint shows you. And so there isn't much. But again, that's better, that's good growth. That's almost at the rate of inflation on a global basis. We did exclude Argentina here because otherwise it skews the data. And then outside, looking at the rest of the world by the regions and the cuts here, you can see Japan very strong. Again, ADR growth at almost 15%, rest of Europe, Middle East, Africa, Latin America, and really it's down in the US we are seeing that weakness, and then also in China we are seeing the weakness for luxury hotels in terms of ADR in China actually going the reverse, going negative. Most hotels, though, on a nominal basis, have an ADR that's higher than what it was in 2019. So essentially looking at that left-hand slide, 83% of hotels are charging more today than they did in 2019. And you can also see that on the right-hand slide, the UK, Spain, Italy, all their hotels are above in terms of ADR, above 2019. But again, as I caution you, if you look at it and adjust for inflation, it's a different story. This is still a better story than most hotels, than the general population of hotels. But again, it goes back to the idea that we're still not at the finish line. We're only 52% of hotels, when you adjust for inflation, have a higher rate, a real ADR above 2019. But there are a couple of countries where all their hotels are above that rate, including Italy and France. And I should mention, when we're looking at this data, we're only looking at hotels that are comparable. They have to be open in 2019, right? So that's part of the math. And we're also looking at hotels that are reporting consistently. So I do all the comparable tests to make certain that we're looking at apples to apples on all this data. We mentioned yesterday on this stage that there are more hotels today with $1,000 ADRs. And here's a slide that I try to remember yesterday by memory, but there are essentially only 491 hotels with an ADR above $1,000. But in 2019, there was only 162 hotels. And then when you go look at it real, even on a real basis, adjusting for inflation, there are still more hotels with $1,000 ADR than ever before. And again, we looked at this on October year-to-date basis. And then finally, to end this part of it, just looking at RevPAR, we have one more slide after this, but essentially RevPAR is growing at 5.5%, and then you can see how it's growing around the world. But again, I would say when you adjust for inflation, again, less than half of hotels today, luxury hotels, have a RevPAR that's above where they were in 2019. So about 47%. So again, there's still a lot more recovery left. And so don't become complacent. There's still recovery, and we know that costs are rising on everything. So again, RevPAR, and that's the top line. Then you're talking about the bottom line, which will also be impacted. And again, the only two countries that are doing much better, or three countries, are Italy, France, and Spain, which has seen a lot of outbound travel from the US and other parts of the world. So that's a quick, just what's happened. Then we're going to go into our forecast and what we're thinking about. Are there any questions or thoughts? Yes?
These are percentages based upon the hotels in those countries, right?
Yes. Yeah, so basically,
What country has the most hotels?
most luxury hotels, I'm going to say the US, but I'm not 100%. I would say it has to be the US has the most luxury hotels.
Thank you.
Yeah, but I'd have to check. That's a good question. I'd have to check. But I would imagine it has to be the US because that goes back to the homogenization idea that we talked about yesterday. Yes?
The slide says real RevPAR, is this inflation adjusted?
Yes, correct. Anytime we use the word real, it's inflation adjusted.
What is the inflation from 19 to?
In the US, I have it by country, but in the US it's about 23%. So that's the average for 24 versus 2019. What we do is we take the data and then we baseline it to 2019. And that's how we're working all the math.
Did you adjust France net of the Olympics?
No, I didn't adjust anything. net of the Olympics. In fact, France, if you saw some of the other, it's actually been, occupancy's actually been declining in France, because what we thought, the hypothesis we had there overall, not just for luxury hotels, was that people stayed away because of the Olympics, unless you were going to the Olympics, right? And it was that they just didn't want to deal with that, the craziness of the Olympics. We were in France just before the Olympics, and it still was pretty crowded. We were in Saint-Tropez, we're in the south of France. It didn't look empty, put it that way. And the rates suggested that it wasn't empty because the rates were still high. Other questions? Yes?
Generally, how do you, or maybe it'll be part of your forecast. I'll save my question.
Okay. All right, we can go that. All right, rescinded the question.
Just delayed.
Delayed, okay. All right, so what do we think about? All our models start with GDP. There is not a single forecasting model that does not look at GDP to see what's happening. What is difficult right now, and what we're starting to say about forecasting in general, is right now we think more of the same for 25. And it almost plays out with the GDP numbers we're looking at. They're pretty much the same as they were over the last 2 years. And so when you start thinking about 2025, even though there's a lot of optimism out there, there's also a lot of talk of changes, especially in the US with the administration. We can't build that in because our models are macroeconomically driven. You need the inputs, and none of the inputs we're using right now take that to account. And so if tariffs do happen, inflation will rise. We're not putting that into account right now because we don't know what will actually happen. So that's why when you look at all this, we're saying, hey, overall it's more the same. There are still parts of the world, though, that are going to see better growth than what we're seeing in the US, because you can see the US is kind of the upper half, but again, Asia is going to see better growth. Obviously China, which has been seeing much better growth over time versus the US, but then you also have Middle East, Africa, Caribbean. So why is that important for you? Again, as you're thinking about where your properties are, development, again, there are parts of the world that continue to do well. And so there should be good growth and the opportunity, we were talking about that yesterday, for luxury properties. Because again, there are everything, it's not just 2.8% globally. It does vary, obviously, by country. And the good news, which is good news, bad news, is that inflation is slowing, right? Inflation slowing is good for buyers, for people, obviously travelers, couldn't think of that word. It's somewhat of a bad news in terms of sellers, right? Because when there's inflation, you also see movement in ADR. There is a relationship there, obviously. That's not rocket science. And that's also an input into our ADR piece as well. So we use inflation. We're also looking at exchange rates. We're looking at employment. We're looking at just multiple factors that we think will drive demand or drives demand. And on the price side, we're looking at inflation. We're looking at occupancies, because we know absolute occupancies, depending where they're at, also impact ADR. And then we're also looking at just some cross-travel pollination and how that will work. With the in terms of international travel, we work with Tourism Economics. They are our partners in both the development of our models as well as a lot of the data you're seeing here. And you can see they believe that next year international travel will be 13% higher than what it was in 2019. I would take it with a grain of salt. What I would read when I look at this is we are going to start seeing the return of international travels and arrivals, but just take it with a grain of salt. We know that people are starting to move in more, so we're starting to see the travel flows. But then for the US, if you're US based, you've got to be very careful because whatever policies are enacted could impact that inbound travel, even if it's just perceptions of the US. But again, overall, our view is, yeah, we're going to continue seeing that recovery in international travelers, which will be good for all hotel classes. In terms of supply, we're still seeing significant supply growth. You can see it in China. What's interesting about this slide is, again, I put here what's in construction now. That's like 95% going to make it. We didn't put by what year it's going to open. And then I put what's in final planning. And you can see, again, lots of rooms under construction globally, but there's also a good number that haven't even broken ground, haven't even gotten to the design stage, what we call planning. And then we have, again, China leading the pack. They're telling me to wrap it up. So our forecast is for essentially, again, more of the same. But the composition of that growth is a little different. You can see that this year growth was essentially for luxury hotels from occupancy side because ADR declined. We think it flips in 2025, that it's going to be driven by ADR with some negativity in occupancy. And then by 26, it gets back to more normal. And then finally, if you're looking at it, how does this compare to others in the chain scales in the US? Again, you can see we think the best growth will be in upper upscale. Again, that's a lot of convention meetings, everything's still coming back. And that's it. Basically, I was going fast for you, thank you. So moderate growth, significant gaps. I think that's the key. Just remember, there's still significant gaps. Don't get complacent. There is still more to get done. And then I still think there is increasing optimism around everything we heard at Phoenix at the lodging conference was very optimistic. And if you want to listen to more of what we have to say, here's my plug for my good friend, Jan Freitag. We do our Tell Me More Hospitality podcast. The latest one just dropped last week. And this is where you can, wherever you get your podcasts. And then if you ever want to reach out, there's my email address as well as my LinkedIn. Thank you. Do we have time for a few questions? Is the next panel here yet? Okay, we can have time until they get here. We can ask questions. Your question on the forecast.
Yeah, my question was, when you look at consumer price elasticity, I think yesterday in your session you talked about how there's a new luxury segment of relatively younger travelers taking advantage of that. And when you look at it, do you look at different price elasticity of that traditional luxury guest?
No, because again, we're just using hotel data. We have no demographic information whatsoever into our inputs at this point. So it literally is just hotel level data, it's time series, plus all the macroeconomic factors that we look at. So that would be great, but no, we don't have it.
Just a clarification point on the forecast ADR growth is 1.8%.
Yes, yep.
So if we're against inflation, it's going to be
Right.
ADR.
Yes, exactly right. Yeah, because even that ADR, if I looked at it, that ADR, I don't remember the percentage, we can look at it quickly. It's right at, it's still under, if you look at the blue portion of that for 25, it is under the rate of inflation, because inflation should be 2.3, I think is what I think that's what it is. And this, right, no, RevPAR is 1.8. Yeah, and then so we're looking at about 1.9% ADR growth. So that means real ADR will actually go negative. Correct. That is correct.